Hello, welcome back to another installment of Mortgage Talk with Nitza and Jess. I am Danitza Nicklow, Realtor with Berkshire Hathaway, the preferred realty in Pittsburgh, and this is Jess Lyons with Lyonsgate Funding. Hello.
Hey, hi everyone.
So how have you been with all of this kind of crazy news that's coming out about these loan level price adjustments?
Well, we've had lots of calls from a lot of people, very angry realtors and angry customers. And really, I think, unfortunately, like all news, there's only one side really portrayed to everyone. And usually that's not the whole story. So I think sometimes the news likes to upset people and get them in a rile without really explaining things. And honestly, loan level price adjustments are not a really easy thing for people to comprehend that work in the business, let alone people that don't work in the business.
Yeah.
But
My
yeah, a lot
thought
of
on
people
it
think that
is, I was going to say, my thought on it is the news is out to sell and to, attract attention, not necessarily get the nitty gritty details. So that's what we're here with you for.
yeah, I agree. I think sorry everybody. I think the news is out to sell, and the big thing is there's going to be a very small percentage of people that are affected by the changes in a negative way. For the most part, the majority of the changes are going to benefit a lot more people than the people that are going to be affected negatively.
Good.
It's only people that are in a higher loan to value with a higher credit score. The pricing is going to be a little bit worse, but it's not anything substantial. It's not like you're going to see one person getting a 0.5% higher interest rate than another. It's going to be a very minimal amount. So people really should not let that impact or worry them because it really is not going to make much of a difference. But
And really interest rates and all of that are really important to know about and obviously shop within your budget, but it's not going to affect if now's the right time for you to purchase a house, right? There's so many other extenuating circumstances, life and jobs and all of that sort of stuff.
yes, for sure. I mean, and really, as we've talked about before, we're thinking rates will go down. So even if the rate's a little bit higher right now, it's going to go down whenever the election gets closer and everyone will have the opportunity. But it should not be a determiner between whether or not you want to buy a house now or later, because I don't think that's going to change anytime soon. So
Yeah.
putting off a search because of this would be a silly thing to do.
So
And
talking about kind of putting the search off, some people put a search off or think that they can't, move in and it's not a time for them to buy a house because they've recently switched a job. Now, that's not true, right? As long as you're currently working and you have a decent job history, period, it's good.
yeah, so basically, every scenario, as we've talked about before, is different from person to person, right? I would
Yes.
love to say it's the same across the board, but for the most part, if somebody goes from one salary job to another salary job, it's really not going to be an impact unless they take off an extended period of time in between. Even if you're going from an hourly job, if you're working the same amount of hours that you were previously working, that's not really going to be that huge of an issue either. The big problem that we have is when people go from being either an hourly or salary employee to being self-employed or a commissioned employee. That's when it gets really tricky and the whole 2-year thing comes into play, because when we're looking at a self-employed person, most of the time we're going to need to average out over a 2-year history for consistency. And same thing with a commissioned employee or a 1099 employee. If they are getting variable income, you need to have 2-year history to be able to figure out what that income is going to average out to. So that's really the only time where you can't make a change. But let's just say, for example, you're an engineer and you're working for Westinghouse, and Siemens comes along and says, hey, you know what, Danitza, I would love to hire you and I'm going to give you a $30,000 raise on your salary.
Sure.
You
Let's
can
go for
definitely
it.
take that. And I've had people, not that we like it, but we've had people that do it during the process. At the end of the day, if it's going to better your situation and get you more money, all you need to do is talk to whoever you're working with, let them know the situation, and they'll tell you what's needed in order to make sure that there's no problems. But um, it's amazing how many people think if they've switched jobs within the last 2 years that it makes them ineligible, and that's not the case at all. It's just certain scenarios, it could be a problem, but for the most, it really is not. So
Well, that's good. And, you know, again, as you said, we talked about it before, every case is individual. So, you know, that opens the door with these other, you know, changes and factors that maybe a lot more people will be able to become homeowners and, you know, reap those benefits.
yep, no, definitely. I mean, the one thing I can stress though is if people are really wanting to buy a house, credit, whatever you can do, make sure that you focus on your credit and pay your bills on time. Because one of the things that I've seen and a lot of underwriters and other loan officers are seeing is the automated systems that give us our approvals for the underwriter. They've definitely tightened up a lot lately, and the best thing you can do is have the highest possible credit score and also the lowest debt to income possible, because those are really two of the main things that they're looking at. And it's crazy, but the difference between, you know, a 661 credit score and a 659 credit score, it could be night and day. And I mean, I know it's like 2 points, but 2 points could be the difference between an approval and no approval.
Yeah.
So
You
super, super
mentioned
important.
the debt to income ratio. Now,
Mhm.
a lot of people are saving up for down payments and they have all these other debts. Now, when they talk to you, you can definitely kind of look at their overall picture and help guide them that you maybe as big of a down payment isn't as good as having less debt to income. So pay off some of that. So, you know, is that something that you see often that you can advise on?
Yeah, it definitely is something, I mean, because everybody always wants to avoid mortgage insurance, but at the end of the day, as we've kind of talked about, the mortgage insurance is different from loan to loan. And, you know, if you're on a conventional loan, the difference between having, you know, a little bit of mortgage insurance versus having a much lower debt to income ratio. Typically, the much lower debt to income ratio is going to be the better way to focus. The other thing, too, is just people's monthly cash flow, the money going in versus the money going out. It's going to be tremendously better if you're paying off higher. Like if you take some of that money, pay off some high debt credit cards that are having interest rates. I
Mm-hmm.
mean, it's unbelievable, but I saw somebody today, he had a few Affirm accounts and they were charging 29% interest.
Yeah.
So,
Somebody talked
I,
me into you know, a Macy's card at one point, and when I looked at the paperwork, it was like 27%. I said, no, thank you. We're good.
yeah, I mean, so much better. I mean, to have, if you have enough money for the minimum down payment. Now, if you're struggling on that, then there's other things that we got to look at. But in general, your money is definitely more well spent getting rid of some of that debt. So when you go into the house, you have a much lower amount of money going out every month versus the difference of putting a little bit more on the mortgage, because you'll see, I mean, we can calculate the numbers and sometimes it's a matter of hundreds of dollars for a few $1,000s. Like getting rid of a few credit cards could save hundreds of dollars versus maybe saving you $50 on the mortgage.
Yeah.
So definitely a good thought and something to consider for everybody. And that's why we like to kind of look at the whole picture and say, you know, it's not a one fit all approach,
Mm-hmm.
because every person is so different. And even sometimes house to house is so different.
Oh,
I
yeah.
mean, you
Taxes,
see it
especially
with
around
like,
here, they can totally change a payment,
mhm.
and you know, somebody can get approved for 150 and you know, they're shopping in West Mifflin and that's totally fine. They cross the street over to Pleasant Hills and now they're down to 100. So yeah, definitely that, you know, house to house makes a big difference at times.
Yes, yeah, the taxes and even the insurance. I mean, Lately, one of the things I've been seeing that's really changing a lot is how much it's costing for insurance. And the cost of insurance has gone up tremendously over the last year. So it can also play a factor into the monthly payment because, you know, if the mortgage or the homeowner's insurance is $30 more or $40 more a month than what you were originally anticipating, that's a lot of money on the
Mhm.
mortgage right there too.
Yeah.
So
Yeah. So another factor on, start talking to those agents early, but talk with us, bring them into the team. So, there might be extenuating factors person to person for insurance that we need to know specifically. So, you know, I feel like we're just repeating the same things, but it's good to do it. That start early, talk to a team, talk to a trusted local lender, local real estate agent. We got your back, and we're here for you. So, I don't know. I think we just lost Jess, and she's frozen.
oh, I'm here.
Okay.
Sorry.
No, that's fine. Obviously, it happens. Technology is great when it works. So I think, we touched on a lot today. Any other, lasting ideas or points to leave with our viewers?
I don't know. I guess my advice is if you do get out there and you start looking for a house, make sure that as soon as you get under contract that you're getting your stuff to whoever the mortgage person is that you're working with, just because rates are continuing to be volatile and all over the place every day. So as soon as you get your offer accepted, I would definitely talk to somebody about getting it locked in and moving forward very quickly. And the other thing is, like I've seen lately where some people, take a while once the offer gets accepted. You can't really do that. Like you need to be on the ball. As soon as it gets accepted, you need to get with your mortgage person, with your realtor, get your home inspection scheduled, get your appraisal scheduled, get the loan into underwriting right away, because the more time you have, it fixes all problems. The less time you have, it causes problems. So if anything's going to come up, if you're on top of things and moving quickly, you've got more time to work to fix issues.
Yeah.
But whenever you take your time and don't get things in a timely fashion, it can cause a trickle down effect and it can definitely delay things.
Yeah, and not only possibly delay, things could have to be canceled or changed, or,
Yes.
you don't feel, or the buyer doesn't feel as confident and comfortable making a rush decision as they do, having a night to think on it. So I 100% agree, and going to reiterate that do everything as timely as possible.
Yep, that's definitely my key advice for today. Credit, doing things fast, and if you have questions and you want to get more in-depth information on your scenario, Danitza and I are here to talk. So like she said, call us. We are happy to help.
We definitely are. All of our contact information is below. Feel free to reach out, leave us a comment, direct message us, whatever it takes to get a hold of us. We are here and willing and ready and wanting to help. So thanks again for all the wonderful information and your time today, Jess. I hope you're able to enjoy some, wonderful afternoon activities today.
Thanks. I hope you have a great afternoon too. And everyone else watching, have a great day.
Yes. So this has been another installment of Mortgage Talk with Nitza and Jess. I'm Danitza Nicklow with Berkshire Hathaway, the preferred realty, and that is Jess Lyons with Lyonsgate Funding. So we will see you again soon.